Fintech, the future of banking. It's hard to read a newspaper and not see any fintech company being mentioned. The fintech revolution has taken center stage with investors squaring up to get some action. If you were to look around for the most recent funding provided by Silicon Valley to startup, you would notice that fintech is the uniquely vocal favorite. It doesn't matter whether the funds invest in concept stage companies or companies that are already generating positive cash flow. Everybody seems to have a hand in the fintech pie. Analysts have been repeatedly calling fintech the technology of the future. So, what is fintech? Fintech is the use of technology to improve the financial services that have been traditionally provided by banks. The field is quite vast and includes a lot of concepts that the reader may have heard about. Fintech includes technologies like blockchain, peer-to-peer lending, voice recognition, DigiPay, and so on. Technology is transforming every sector in the economy, and banking is no exception. Thanks to technology, the bankers of tomorrow are going to be very different than the bankers of today. We can already see this happening in the retail sector. The employees of Amazon are very different from the employees of Walmart. Different in the sense that they will have a very different background and skill set as compared to the bankers that we know and see today. The banking provision is rapidly evolving, and fintech is just speeding up the process. Why is fintech revolution happening now? Why now? This is the question that comes to mind when we think of the fintech revolution. Technology is no new thing. Then why is that suddenly there are an enormous number of startups which think that they can provide tremendous customer value by providing products and services in this field? Well, there is a story to it. Till 2008, most banks in the world had huge budget earned market for technology. These banks would stay abreast with the latest technology. However, in the year 2008, banks faced an existential crisis. This meant that they had other priorities to deal with. There were regulatory concerns and mergers and acquisitions were happening at an increasing pace in the market. In such a scenario, technology wasn't high on the priority list of any bank. As such, technology took a backseat during the years that followed. Just because the bank were not interested in investing in technology didn't mean that technology was no longer important. During the same years, technology started growing at an alarming rate. Since it wasn't being absorbed by the banks themselves, many outside non-banking companies saw a huge gap in the marketplace. This is the gap that these companies are trying to serve with the help of massive funding from the venture capitalists. One would be surprised to learn some of the players that have heavily invested in the fintech space. Consider the fact that Facebook has already acquired a regulatory license to use its Messenger app to transfer money. Similarly, Amazon has used its platform to disburse student loans and was very successful. Also, Alibaba made a huge money market mutual fund by collecting a few $100s from many of its shoppers. The initial result of a lot of these experiments have been encouraging. Why are traditional banks worried? The banking sector is facing a public relations problem. Most banks are viewed as being predatory. On the other hand, technology companies are viewed as being friendly. People trust them enough to share their family photos and intimate details. It is likely that they will not mind transacting financially on this website as well. The negative image that banks have versus the trust that people place on the social networking sites is getting the banks increasingly worried. Thank you.